Intraday trading theory. Trading opinion can be made in a very concrete or a structured manner, just like how investors study into the financial numbers of their favorite stocks they are about to invest into. Short-term traders also have its numbers that we study into. It is the price behavior or the price data of that instrument that we are trading. When these data convert into pictorial format, it became a chart. And I'm going to share with you a simple illustration on intraday trading using trend lines and divergence to derive entries. You will find how this can be done in a very structured manner and you don't have to guess too much into it. I have included some links below on my previous videos on trend lines and divergence. All right, let's get started. Before we get into the topic, disclaimer. So please take some time to read through the disclaimer in the description box below as well. And the first rule about intraday trading theory is we have to acknowledge the word intraday, meaning all trade are done within the day itself. And we have to square off all our position before the market close. This is because we do not wish to carry any overnight risk with unexpected gaps. This is on Monday and today's Thursday and market just opened. But I thought that to give you the best demonstration where we find an opportunity to sell short and we also find an opportunity to long into the market within the day itself. And later on, we'll look at the live market and see what we have learned on Monday. Will it be applicable to the live market as well? Now, so what happened here is that this is Monday, 8th of August, as we could see here. And I'm going to expand this chart a little bit. And we could see that as the market opened at my time, 9:30 p.m., using Singapore time here. Now, as the market creep up, as it climb up, so what I'm going to do here is that first I'm interested to look out for a divergence. As the market creep up, we saw that this is a 1 minute. Now this, by the way, is 1 minute chart. Yeah, 1 minute chart. And it forms a bullishness with new peaks. And I'm going to draw this. And this is what I saw then. This little peak, which is a higher high. That's what we could see here. And on the MACD, I could see that the peak itself, it was a lower high. And now this is called bullish divergence. Now, whenever the bullish divergence happen, it means that this 1 minute bull is losing some steam. Now, I'm looking out for triggers. And what are the triggers? And you could use many ways to do it, but I'm going to show you a very simple illustration here, just trend line. Now, in the previous videos, I mentioned about to draw an uptrend line, we look at three significant bottoms at least, and I'm going to connect them together with, and you're going to find the best fit. And that's what we see here. And we could see that it was almost there. Really nice. I'm going to expand this further. Now, with first is the bullish divergence means that we acknowledge that this 1 minute bull is getting a little bit tired. Maybe there will be a shorting opportunity. And with this uptrend line, we acknowledge that the market has trending along this uptrend line really nicely. And somewhere along the timeline, kind of broken, but not too convincingly until this guy hit here. It kind of break convincingly. And I'll acknowledge that this will be the trigger, and moving forward, any timeline along here and onwards is a sell short opportunity for me. And of course, with intraday, I will always enjoy. In fact, it's a rule that having a stop loss is necessary. Now, say for example, if we sell short somewhere around 380, as you could see here, 380. Now, this will be a line, a point where I found that it's worth looking at it. Now, 380, if we sell short, and the stop loss, we could look at the highest point, 380 with 420, that's about 40 points losses. Now, let's just bring your attention to how all these works here. If you're new to trading, we have to understand about contract specs. So what we're looking here in this contract that I'm trading, On Monday, it was micro, e-mini, NASDAQ. Now, the contract spec states that every quarter point movement, that's the minimum movement, is 50 cents US dollars. Uh, Personally, I just convert it to one full point. 1 point, it means 2 US, simple calculation. Now, so as we enter into the market at about 380 to do a sell short, and we also have to plan that if we are wrong, I'm going to stop at 420. So it's about 40-point losses, as we could see here. So 40 times 2, that is the damage is going to be 40 times 2 is 80 US dollars. So that's I'm prepared for it. But thankfully, the market did come down and form a very nice trend. As we could see that as the market continued to trend down, I was pretty happy on Monday itself. And basically Tuesday and Wednesday kind of get and stay stagnant for the whole day. Though Wednesday is a figures night, but it just not volatile enough for me. Now, so we are short at 380. And as the market developed, so this is what happened here. And we saw that there were a bearish divergence. Now we could see that as the market developed, new low, but what I could see here is there was a bearish divergence. So same thing here is a lower low. We acknowledge that. And on the MACD, I saw a higher low. Now this is called a bearish divergence. So reversely, we have to think that this bear is losing some steam. 380, and it's time to buy back about 3200. Let me just put in a very simple illustration here. So you short at about 380 or 360, about there, and you buy back at 13,200. That is about 160 points. 160 points times 2, and that is a net or gross profit of 320 US dollars. So now as it developed, we're going to use back the same strategy. I'm just giving you an illustration. That doesn't mean that I turn into a long position, but just want to give you a full demonstration of within the Monday itself. I think there were quite a bit of opportunity there. And you have to bear in mind that my time, it was at 12 a.m. in the morning. So I was pretty tired back then. So anyway, as I was short, and this was an opportunity for me to cash out really. Now, but along the way, it also developed a bearish divergence. Now we're going to apply the same thing here. Draw a downtrend line connecting all the peaks. Yeah. Okay. Now, the rule of drawing a downtrend line is where we have to find again 3 significant peaks, and we try to make the best adjustment out of it. I felt that maybe that was not the one, and this is the one. Okay. Now we could see that there's 1, 2, 3, 4, about 4 significant peaks. And now the same rule apply. We just have the thing reversely, is that we saw a bearish divergence. That means that the bear is getting a little bit losing its momentum, and we wait for this cross up. Now, just take as we have bought at 13,200, and you may consider to turn long. Say, for example, you have turned long, and this will be a stop out point. As you turn long, you put a stop out point, and that is it. Now, as it progresses, you got stop out. I just want to let you know that for short-term trading, cutting loss is part of the deal. Cutting loss is part of the deal, and that's the deal. Now, as it progresses, you got stop out. That's fair enough. Now, but as the time developed, as the day developed, I could see that there were another bearish divergence. Now, let's take a look at this here, which I didn't participate because I'm asleep by then. So, right. So I saw another bearish divergence, and this is what I saw. So we could do this. And we also spoke about previously about secondary downtrend line, which I'm not going to describe too much into it, and because then they'll be too lengthy for this presentation. Now, we saw another bearish divergence, and that was a secondary downtrend line, and it kind of break. Now, at the point in time, you have to understand that it's already 3 a.m. My morning means that I have another 1 hour of trading time. So if that makes sense for you to enter the market for 1 hour run. But say, for example, if you get into the market then, and you do a MOC, market on close, it kind of net off from the loss that we have. But overall, we're pretty happy because of this nice little run at the early part of the day where we did a sell short and we saw a bearish divergence and quickly we cash out from here. Now, let's look at what it is right now, today's market, which is market just open, and see if we could find any opportunity here. And I hope that that will bless you for the rest of the evening. And what I see here is market is today, what day are we? We are 11th of August. And market gap up, it traded higher, but I saw a bearish divergence right now. That's great. And my time is still pretty early. It's about 10:40 p.m. Yeah. So now as I'm going to draw a uptrend line, this could be the point, and it just broke. Okay. So what's my call today? I'm going to short the market after this video and have a stop loss above 13,575 and see how it works as the day progresses. And let's go back to where the most classic example for the week, which is on the Monday itself. Okay, just going to blow this up. Yeah, to let you appreciate what we've discussed the whole day. And basically we talk about divergence, trend line. We could see that over the past videos, I use trend line, divergence, and it works for my long-term investing, short-term position. But today, for the first time, I'm sharing about intraday trading. So I hope to share more rules and practical examples on trading soon. So feel free to leave any comments below. Continue to explore this topic with these related videos and register for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.